The headline over at Business Insider, the UK finance division, Leanna Brinded writing this for Business Insider. The Bank for International Settlements, the BIS, also known as the central bank's central bank, and I'm quoting here from Leanna, is warning that there is a gathering storm in the global economy, in part caused by governments around the world running out of monetary policy options. Now, this is what I wrote about in Crash of 2016, and it's a pretty straightforward thing. And how this is going to affect the elections, how this is going to affect the future of the United States and the world is all still very much up in the air. And a lot is going to happen. A lot is going to depend on what happens and how quickly it happens. But the big headline that I saw as we were flying through whatever airport it was yesterday, it was Portland to D.C., was by Gabriel Wildau in Beijing. Again, it was the front page. This is the front page story of the Financial Times. And the headline was, China exports plunge fastest since 2009 on weak global demand. So there's, this is what I've been saying all along, that the crash of 2007, 8, 9 has never been fixed. It is a crash that was caused by three foundational core issues. Number one, Reaganism, which transferred massive amounts of wealth to the top and reduced wealth and income at the bottom, number one. And that's been going on since 1981 without stop. Bill Clinton slowed it down slightly by raising tax rates on rich people. George Bush dropped them again. Barack Obama slowed it down a little bit by raising tax rates on rich people. But, we're below 50%. When Ronald Reagan came into office, the top tax rate on really rich people was 74%. And that was why when Reagan came into office, the average CEO only made 30 times what his average employee did, because after that, why pay the rest of it as taxes? Reagan changed the rules of the game with regard to employee compensation, particularly executive compensation. And he changed the rules of the game with regard to taxation. So number one, people are being wiped out. Number two, we've engaged in a series of absolutely insane trade policies. These shouldn't even be called trade policies because the Constitution calls them treaties, but none of them was passed by the Senate with a 2/3 majority vote. And this is devastating. It's just absolutely devastating people. And number three, the one that's most commonly cited and is the most obvious, is the fact that in 2009 in 1999 and in 2000, with Gramm-Leach-Bliley and the Commodity Futures Modernization Act, Republicans in Congress, by and large, with the help of a few Democrats, but the Republicans could have done it all by themselves, Republicans in Congress passed legislation, which was signed by President Clinton, that deregulated commodity trading, which allowed for all these dark markets and these CDOs and CDSs and derivatives and all this kind of stuff. We went from having less than $60 trillion in derivatives to over $900 trillion in derivatives in just 8 years. Keep in mind, the GDP of the entire planet is $65 trillion. And that allowed gambling banks, investment firms to merge with checkbook banks, which led to the crash. Not to mention the fact that the larger deregulation of the banks allowed them to sell mortgages to people who didn't qualify for the mortgages, and in many cases the people didn't realize they didn't qualify because they were being lied to. They were being told, "Oh, this is an adjustable rate mortgage. You don't need to know what that is. Your rate is only going to be $400 a month," without telling them that in 4 years it's going to jump to $2,000 a month because it's an adjustable rate mortgage, right? Or whatever it's going to jump to. And so, they suckered people in. Or in some cases, they just plain old flat out lied on the loan application and simply said, sign here, you can have this house. And people were thrilled. People had no experience with housing. Now, we used to, basically protect people like that with regulation. We didn't. So these things crashed the economy. None of these things has been fixed. So what did we do? Well, we took about $20 trillion of invented money by the Federal Reserve, and they loaned it out to very rich people, billionaires, not just in the United States, but around the world, so that their portfolios wouldn't go to hell. Loaned it out to banks. I mean, and then of course we had the two TARPs under Bush and the one TARP under Reagan, Toxic Asset Relief Program, which is a fancy way of saying we will buy from the banks the crap that they created that's destroying the banking system. Taxpayers will pay for it. And none of that has been fixed. And so what have we done? We have, number one, we propped up the banks. Number two, we've been propping up big transnational corporations. And the number of them that pay no taxes at all is genuinely astonishing. And number three, and perhaps most importantly, these central banks, not just of the United States, but the European Central Bank, the Chinese Central Bank, the Japanese Central Bank now has done this. The central banks that control the money supplies, they're going all the way down to negative interest rate. In other words, they're giving away money for free. Who are they giving it to? Well, the only people central banks can give money to is the big banks. So, we've got a serious problem here, and a day of reckoning is coming. And we will see where this day of reckoning goes.